In my opinion, Renko charts are absolutely mind-blowingly fabulous for trading because they just take away so much of the noise, make everything far more transparent, and just, I find them easier to use, and I've been using them very successfully for many years in my own trading. And on the YouTube channel, if you subscribe, dive into the playlist, you'll find a whole section on Renko chart trading. Now in this video I'm going to look at 4 particular patterns that the Renko charts produce that I find very valuable to my trading. And now in this day and age with technology, you can add indicators, tools, all sorts of things on top of the Renko charts, and patterns, well, they add an extra valuable resource. And because of that transparency of the Renko charts, they make the candlestick or Heikin-Ashi type charts, well, in my opinion, sort of irrelevant when you can see the patterns playing out far more easily when you use the Renko chart. So in this video, like I said, I'm going to take you through 4 of my favorites that I use all the time. So with that, let's get into those 4. Now my first example here is what I like to call buying the dip, and again, because we're not looking at the candlesticks or the Heikin-Ashis, it sort of clears out the noise. And in front of you got AMD, the big semiconductor US stock, and maybe your point of view is bullish and you see that price rocketing up. When do you get back in? Well, often you wait for the dip buying opportunity, and the Renko chart gives you that very nicely. Now we can see here AMD has been bullish along with stocks like Nvidia. It keeps pulling back like this and then giving you the opportunity to get back in, like I said, for those nice big up moves that you've been anticipating because the semiconductor stocks look so hot. So what we're looking for, like I said, is this sort of pullback in the price and then the dip, the return to the bullishness. Now on its own it looks very good and very easy to do this, but I can tell you, it is quite a tricky art to time your way back in buying the dip. So I never ever use this on its own. I will add in further trend indicators, momentum indicator, timing approach to make this buying the dip approach work. Now in this example I've added on a few other indicators. You can see down the bottom we've got the stochastics. It's set to 533, and I look for, if I'm buying that dip, that price to be moving on up through the 20 area and timing that in. Like say, you can see if we just go up to there, that breakout there, the reversal, and then that times in nicely with that move on up, and again the same there, and you get on in. Now even that to me is not good enough, so I've got a longer term moving average on here, so I'm looking for the price to be above it. I've also got this donkey and offset strategy as well involved. So if you want to be even trebly, quadruply sure of getting in, wait for the breakout above that, or this shorter term moving average. I think that's a 9-10 period. Wait for it to break on up there as well, and maybe get out the trade when it moves back into those bands, or across the moving average. So like I said, buying the dip, a great way to get back into your trades, but always use it in conjunction with other indicators and tools. Next up is what I like to call the range, and because of the Renko chart's uniqueness, these blocks, it often creates really obvious range effects and patterns. And we can see here on crude oil, using $1 block size, we can see really that between sort of $82 and down to 72.5, it really didn't want to move out that range for a real long period of time. You got all that along the top there, and that range was actually November of 22 all the way through until it broke out until March of 23 to the downside there. So these ranges, and you can create smaller, longer term ranges for I mostly use them for breakout type situations, and also just seeing what's going on with the price action. Or if you've got a wide range like this, there's plenty of trading opportunity to be had inside that range. So if you added on, say, a stochastic indicator to time your way on those dips there, like we just saw in the previous one, or the price when it sort of gets overbought for the reversal back down to the bottom of that range, if you're confident from your analysis that it's not going to go above there into this zone, then the range is a powerful chart pattern that is very useful to play out and use. And you can see here the price, it broke down, it's gone back into the range, and again it's struggling to get through those previous levels. So it's a useful pattern to, like I said, add into the armory. So next up, the head and shoulders pattern, a lot rarer in any chart type, but again, the way Renko works, to me it's a bit more visual. And here we got the GBP USD FX pair, one of the biggest, most liquid traded pairs there are, and set it up with a 10 point block size. If we go up to there, you can just see there, that's to give me more intraday type action and signals. Now what I'm going to draw your attention to is here on the left, we've got a set of blocks there, we got a set of blocks there, and then we've got that head shape there. Now once you get used to these setups, chart types, then you'll spot them a lot quicker. Now using the rules of technical analysis, and this is what makes this a bit easier to use the Renko chart. You see we've got 1, 2, 3, 4, 5 blocks creating that top to bottom, so the neckline is there, and we're actually going to look for 5 blocks on the breakout, and we've actually got 1, 2, 3, 4, so we didn't quite get there. And actually quite interestingly, and what you see with a lot of these head and shoulders patterns is the price reversing back to the neckline and then moving on down a lot further, a lot faster. And actually if we were patient and we had our risk management in place, our stop loss could have been above those shoulders, and we just sat and waited. You're really conservative, you go above the turning point of the head there, and you could have followed that down and maybe got taken out, trailed it and got taken out of that one. Or a bit more patient, you waited at the other side of the neckline, then you'd have actually ended up 5, 6, 7, 8 blocks before possibly getting taken out. But again, I would use this pattern with other indicators and tools, maybe shorter term, longer term, moving averages. Let's just get rid of the drawings there. We've got our side there. Let's just draw on the head and shoulders once more. We go there very quickly, there and there, and we've got a moving average on here. Maybe we get out on the moving average. These are just hypothetical examples for you to try and play around with. Again, add on other indicators. We've got the stochastic here, maybe use that one for the getting out part of the trade. So we followed that down, a bit like the moving average, wait till it comes back, reverses through the 20 level to get out the trade, which would have got you out in a similar sort of place. So head and shoulders, this one's not as obvious as some of the others, but some really do stand out and are obvious. I suppose using this example, we could sort of see a version here going down there, but what I'm also often looking for is that trend to come up in here. That's the strict rules of technical analysis. Notice here we got that trend coming up into it, small trend, but a trend enough to reverse it on back down. So that's my third chart pattern that I like to look out for. And don't forget also reverse head and shoulders. We've seen that opposite way there. We draw that on here, the price coming down in there and then going that way in terms of the block. So the traditional head and shoulders and the reverse head and shoulders work very nicely in the Renko setup. And finally, we got tops and bottoms, and that is very similar to the tops and bottoms you see on standard charts. Again, the clarity I think is made better here, and you'll see a lot of double tops and double bottoms and treble tops and treble bottoms on Renko charts. They really do stand out. We got Apple here, the stock, and let's just highlight that. You got a double bottom there, and off it runs. I've left on the indicators. We got a moving average. You know, it breaks there and it moves up through the stochastic there, at the 20 level to confirm, and off it pushes up. We got that W pattern created. The double bottom there on Apple. Let's take a look at another example. And here we've got the US dollar index, ticker DXY. We're going to look at a treble bottom there. You can see that putting in, you know, the Renko chart really does make it very obvious. And then off it goes running on up. Also, I suppose you could go back to one of our early examples, the range. We saw a nice range there for, you know, from the 10th of April through to the 11th of May, in between 102 and 101. So as it broke out, you know, factor in both those type of chart patterns. But that's an example of a treble bottom. And one final example, and here we've got the Australian dollar, another major currency pair, double top this time. Got the M shape playing out. It breaks down. We use other indicators to confirm, and look at that nice long old run south for that. Now, all of these four patterns that we've looked at work in all sort of markets, whether it's crypto, you know, FX, commodities, stocks, indices, the lot. I find, you know, it works very nicely, and like I say, and I'll reiterate, in conjunction with other tools. That's what gives you the edge, puts the probability more on your side. So always factor in that. Don't just trade the price on its own with Renko charts. There's going to be a lot of whipsaws, a lot of pain and hard work trying to make anything out of any sort of chart type. Actually, if you're just trading price action, it's a very difficult skill to master. You can help yourself a lot by adding in further indicators, and we have seen 4 very useful, profitable ones for you in this video. So there you go, some chart patterns to add into your Renko trading. Like I said, I find them very useful, and as you get familiar with Renko charts, they are a good addition into your trading armory. If you want to learn more about Renko charts, I've got a fabulous playlist on the channel. It specializes just in Renko charts, how to use them, how to build strategies, how I've been using them successfully over all these years. Like I said, it's all in there for you, and that playlist is coming up right now.